Hey everybody, Dr. Tom Carr here of drstocks.com, drstoxx.com. Just a quick note that I have extended our free trial offer about 3 more days. If you go to our website, drstocks.com, click the subscribe button. You can subscribe to any one of our monthly newsletters and you'll get the first month free. Just use free trial, all one word, all uppercase, in the discount code box and you're good to go. No payment for the first 30 days. All right. Let's look at the S&P 500 here. This is an hourly chart of the S&P 500, and we can scroll back to see that we had been in a very nice trading environment some months ago. This is April, May, June, first part of July. We got some nice directional movement, both up and down, up and down, up and down. Quite a wide range there, which is what you like to see. You can swing trade that kind of environment. You can trend trade that environment quite well. But then after the Brexit vote and the big recovery rally, we ended up in this very narrow range that has extended now for over 3 months. We may be pulling out of it here, which is some good news. We may be seeing a more directional movement of the market, but we'll look at that in just a moment. I just wanted to show you that this kind of market environment here, where you do get some multi-day directional movement, is easy to trade relative to this sort of sideways choppiness, which is much more difficult to trend trade. Now, I've been warning folks for several weeks now of these various trend line breaks that we've seen on the hourly chart. These are support lines that have broken to the downside now 3 times, and we don't want to see that if we are bullish the market, because those downside breaks tend to come in succession, and we tend to see them repeated over and over again. We've got both the 200 period moving average and the 50 period moving average now sloping to the downside, and you can see very clearly that we do have a clean support line here, which was tested this morning, and it did hold, but just barely. And that is running parallel with our resistance line up here over the top. So we do have a fairly clean trend channel. Let's tidy this up a little bit here, get a little closer on the closing values. And you can see that's our trend line, and the angle is down. Now, it's not a steep trend line. This could be just a bit of a consolidation, could be something like a very extended bull flag. If you're bullish the market, that would certainly be a positive side. But if we go to the daily chart, I want to show you a pattern that is beginning to emerge here that is rather bearish. Let's scroll a little bit out here. It's called the scallop pattern, and I would refer you to Bukowski's Encyclopedia of Chart Patterns, one of the best books out there on technical analysis, one of my favorite. It's a resource that should be on every trader's shelf. And he talks about the scallop top, or the bearish scallop pattern. And it's one of the most consistently bearish patterns, one of the most reliable patterns that he has noted. And I won't go into all of his research, but he'll give you statistics on how often this sort of pattern will lead to a profitable trade, and what kind of trade, what kind of return you can expect, and so on. I pointed out here, it's just what you get in the bearish scalloping pattern is a series of rounded tops that conclude in lower lows, which is what we're seeing here. See, those are like little scallop moves. Doesn't matter that this second scallop is higher than the first scallop. What matters is that the resolved lows on the right edge of the pattern are lower than the previous one, and we're starting to see that. That is our support trend line right there, and our resistance line over the tops as well. And you can see this is a downward sloping angle with the bearish scallop pattern. Now, what that tells me is that I do expect over the next few days, at least, a bit of a bounce here as we get, maybe we'll put in another scallop. We have the election coming up next Tuesday. That's a big factor. Everyone's watching that. The news cycle, of course, has been feeding into the market frenzy. We've also got an FOMC announcement tomorrow afternoon. That's Wednesday, the 2nd of November, where no one expects the Fed to raise rates, but they may flag a December rate hike. I myself think they won't, but they may. And if they don't, if they come out very dovish, then we may see the market rally just on that news alone. But really, the election has been the big thing, and I don't think we're going to see any sort of resolve, either downside or upside, until the election has been decided. But I have to say that this is not looking real good for the bulls. Now, we've got the rising 200 period moving average down here, and we're coming into that. And that could meet somewhere around 2095, which would be just slightly below our 2100 key support level. But that could happen, just a sheer technical bounce off the 200 SMA. If we do get an upside break, then I would expect the 50 period moving average to come into play, because anytime you tag the underside of a downsloping 50 period moving average, you very often see a sell-off at that point. So we've got this narrowing range here. It's getting narrower and narrower, and it just points to a lot of market confusion. This is a difficult environment in which to trade. What you need to do is avoid the big indexed stocks. So avoid your Apple, your Facebook, your Amazon, your Google. Look for charts that are sort of under the radar, not always on everyone's screen, and that are trending, that are showing clear signs of trending movement. You might also want to shift away from stocks and look at commodities. So you might want to look at a gold trade, for example, or silver trade. Both of those have been doing very well. So those are some ways you can deal with an environment like this. I've been focusing on certain key biotech stocks that we've got on. We've got some gold stocks. We have a silver stock on, and all of those are doing well. There also are some semiconductor stocks that had been doing well, have put in a pullback, and are beginning to look bullish again. So there's some good charts out there, but they're few and far between. And unfortunately, the general market environment is not very supportive right now for either longs or shorts. I'll have to say, I mean, this has been an extremely difficult market for the short side, for the bears to trade as well. But good news is that this too shall pass, and we will get back to a trending market environment probably toward the middle of this month. All right, that's it for now. God bless everybody. See you on the trading floor.